Welcome traders to this new market review for week 15 for Nasdaq futures. First, let's dive into the economic calendar. As you can see, on Monday the 7th, we didn't have any higher medium impact news. Same for Tuesday, only in the evening President Trump was speaking. On Wednesday we had the 10-year bond auction news report coming out, and 2 p.m. FOMC meeting minutes. On Thursday, we had the main news event for the week, which was the CPI release at 8:30 a.m., which came along with the unemployment claims. And later, at the start of the afternoon, 1 p.m., we had the 30-year bond auction news report coming out. On Friday, 8:30 a.m., PPI release, and 10 a.m., consumer sentiment and inflation expectations came out. So if we look at the weekly chart for Nasdaq, you can see that last week we had a huge drop due to the import tariffs from President Trump. Just fell short of trading into these relative equal lows over here. You can see that we had a huge discount new week opening gap where we took the sell side liquidity below these lows. A drop further into this weekly busy. And from there, a relief bounce took place actually on Wednesday, where we had this huge sudden rally due to the fact that the import tariffs were delayed. So let's add some lipstick to the chart. Beautiful. Okay, these were the levels I drew and I was monitoring. So as you can see, last week we fell short of trading into the relative equal lows. On Sunday we opened up with a discount new week opening gap into the relative equal lows over here. Let me see. This weekly busy came in. Oh, it's actually a daily busy. It came in at 16,453 and the low came in at 16,460. So it just fell short 7 points of trading into this daily busy over here. But nonetheless, we took the relative equal lows and boom, traded into the daily busy, which turned into a bearish inversion fair value gap. So on the daily chart, Monday, small relief bounce. Tuesday, an inside day inside Monday's range, as you can see, and this is usually indicative of a larger range unfolding the very next day. And look what happened on Wednesday. Boom, into the premium wick consequent encroachment on the weekly chart. Look at my previous videos to see where these levels were derived from. On Thursday, correction. And Friday we had a inside day as well, as we didn't take Thursday's high and Thursday's low. So this is indicative of Monday or Tuesday having a large range. So yeah, you can actually use that in your own analysis and see where and when you can push or edge a little bit. Okay, on the hourly chart, let's annotate the new week opening gap. Let's make it purple. Okay, so we opened with this discount new week opening gap into the relative equal lows we are monitoring on the weekly time frame. Manipulation below, creating the low of week on Monday. Traded up back into the sell side liquidity pool around 18,340. And on Tuesday we started with manipulation up, but as you can see, the high of Monday came in at 18,361.5. And the high on Tuesday came in at 18,357.25. So it just fell short of trading into Monday's high, which is telling you, look at these relative equal highs, because these will be taken later in time and you can use it as a draw on liquidity. So from there, huge correction into the midpoint of this discount wick, which is discount wick consequent encroachment. On Wednesday, pretty much consolidation, and at 1 p.m. is where Donald Trump announced that most of the import tariffs were delayed or reduced. So that that caused this rally into the premium wick consequent encroachment on the monthly around 18,470, into this bearish inversion fair value gap. Note how it was used over here to send price lower, and over here around the premium wick consequent encroachment on the monthly chart, which was embedded inside the bearish inversion fair value gap, created this decline on Thursday. And Friday, not so much happened because most of the price action already unfolded on Wednesday. Yes, so let's dive into the lower time frames. On Monday, during the London session, we had this manipulation down, waiting for the 3 a.m. macro. That's where the low intraday low was created, and note the beautiful rally unfolding during the London session. Note the retracement inside this bullish breaker over here, and from there expansion up, retracement into this busy, and from there a beautiful long opportunity unfolded. Retracement into this short-term low over here, and from there expansion took place. So if we measure this one without extending it to the right, Control C, Control V. Yeah, note that this rally is almost the same price range as this rally. Just a small trick you can use in your trading and analysis. So pre-market longs were profitable. Going into London lunch, pre-market consolidation, waiting for the right time, which was the opening bell. And opening bell at 9:30 a.m. came along at this down close candle over here. We took the pre-market relative equal lows. Note we had a discount opening range gap of around 600 handles, so that's pretty insane and usually indicative of a continuation towards the downside. But instead, price traded up, and these relative equal highs over here were telling you that a rally was likely to unfold. So price offset the profitable longs over here during the London session, which had their protective sell stops below this low over here and below these relative equal lows, took them all. First presentation was created at 9:41 a.m. Manipulation towards the downside, trading back into first presentation, expansion above the first presentation, and note that this retracement over here didn't trade into the first presentation. So if you use this as an entry model, you wouldn't got filled. And that's not a big problem, but what happened over here is price telling you that it is very strong, and because it's not trading back into the first presentation. And note how the quarter levels of the opening range gap are used. Opening range gap consequent encroachment reached within the first 30 minutes of trading. Note this expansion from the opening range gap consequent encroachment. Let me see, let me add one level over here. Okay, just if you take one standard deviation level from the opening range gap and you add it on top of it, and let's add the 2.25 level, and you can see that the high is created around this level. And you can see that IBDA is using these standard deviation levels derived from the opening range gap. Yeah, that's something to take into account. Okay, so this rally was actually the greatest opportunity of the day. And yeah, for the rest of the day, we pretty much went into consolidation. Why did that occur? Now, if we measure this candle's low towards this candle's high, you can see that we are talking about 10.12% within 33 minutes of time. 1688 handles, which is not normal. It's one of the largest candles I have seen on a daily basis. But yeah, these are rough times, right? So created the high over here, retraced back into opening range gap, consequent encroachment, but consolidation throughout the day. So this long and maybe this short over here were the only opportunities unfolding on Monday. Let me remove the opening range gap and add the opening range. So lowest low, highest high within the opening range, so within the first 30 minutes of trading. A note. Yes, note that we traded into the negative 1.25 level, and note the retracement into the upper quadrant of the opening range. Beautiful, right? Okay, let's go into Tuesday's price action. On Tuesday, the best day of price action occurred. So, London session, pretty much consolidation. Note the 6 a.m. macro delivery, where we took this short-term low, and from there a huge expansion took place of around 600 handles, which is pretty insane. So we took these this short-term low over here, but we left these lows intact. So we left relative equal lows over here, over here, over here. Yeah, around 4 or 5 relative equal lows. So that's a magnet for price. So longs were profitable pre-market. 930 came along on this up close candle over here. We had a premium opening range gap of, well, let's say 460 handles or so. So that's indicative of continuation towards the upside. But again, the opposite occurred. So classic opening range manipulation, trading into the direction of the pre-market session prior to 9:30 a.m. So we traded up, took this short-term high over here, displacement, retracement, and boom. And note the reaction from the first presentation created at 9:36 a.m. Look at this high over here. Boom, into first presentation, and it doesn't really trade into the opening range gap high, and from there continuation towards the sell side. Note how the SIBIs are respected. This SIBI over here, this SIBI IOFET, trading into opening range gap lower quadrant, and from there tapping the opening range gap low, and boom, high regular trading hours created in the first hour of trading, and the low created in the final hour of trading. And this is actually what I am hunting throughout the week. This unfolds multiple times, so you have multiple chances to get in alignment with price action to capture these beautiful shorts over here. So if we measure from this candle's high towards this candle's low, and we draw the -1 standard deviation level and extend it to the right and add the -0.5 level as well. You can see that this price range projected towards the downside gave us 16,979.25. And note, this final hour of trading low, yeah, this is just algorithmic price delivery. It's freaking beautiful if you ask me. Trading up into the -0.5 standard deviation level, where we took these relative equal highs over here, trading into this SIBI, and from there, post-market, if you will, continuation towards the downside. And note where the low is created. So one push up during Asia, leaving these relative equal lows over here. Hey, first presentation of Monday. Yeah, it's probably random, it's probably coincidence. Yeah, you know that's not coincidence. So, just a beautiful day of price action. I was able to capture my my best trading day so far. I actually passed phase one. In just one day of trading in this drop over here. So on my challenge account, I captured 10% net ROI, which is insane. I haven't done that before, but yeah, it's great to pass a challenge within 1 day of trading. And on my live account, I captured around 5.5%. So net total 15.5% plus on the day. Pretty insane. And I hope I can capture more runs like this, because it gives a great boost to the equity curve. And I was pretty happy with that. So let's dive into Wednesday's price action. Okay, on Wednesday it was pretty messy AM session. So during London, creating the low of day inside the first presentation of Monday. Pre-market, we left these relative equal highs intact. We had a very small opening range gap of 27.75 handles. So that's usually indicative of a difficult, messy, choppy AM session. And note what happened. So let me see. 9:30 a.m. this green candle over here. 9:31 a.m. we created the first presentation, which was a busy. Traded up, retracement, fell short of trading into the first presentation, and during the AM session pretty much consolidation, creating these relative equal highs over here. And 11 a.m. macro, we traded into the opening range gap again, and note the reversal. Classic market make buy model in high resistance liquidity run conditions. So trading up, retracement into the first presentation, and from there we rallied into these relative equal highs. So later in the AM session, this was the best opportunity unfolding throughout the day. And then all of a sudden, if you were positioned in the right direction, so in a long position, and you captured some of this run, then you had a pretty good day actually. So let me see, measuring from this low towards this high, almost 2000 handles towards the upside, 11.29% within 2.5 hours of trading. Yeah, which is manipulation. So even though we had this huge manipulation rally towards the upside, we created the regular trading hours high within the final hour of trading. Again, as always. And maybe we can add the opening range and remove the opening range gap for now, because it was a small one and you can't really use the consequent encroachment as a draw on liquidity. So opening range measured from this candle's low towards this candle's high at 10 a.m. We have the red opening range gap with quarter levels. So upper quadrant, midpoint, lower quadrant, opening range low. And note that I added some of the standard deviation levels, and note how price is using the standard deviation levels. Note price action around here. Note this over here. And eventually creating the regular trading hours high around the negative 4.5 standard deviation level. So this is just another tool you can use in your analysis. According to ICT, the best long opportunities unfold inside the upper quadrant of the opening range when the time is right. And note, even though this huge manipulation, trading back into the upper quadrant, falling short of trading into the midpoint, and from there, kaboom. Yeah, but yeah, if you look at this chart right now, it looks yeah, as really nice price action, but that's actually not what unfolded, because yeah, look at this, between 9:30 a.m. and let's say 1 p.m. yeah, just consolidation. So this was not a really nice day of price action. Yeah, let's dive into Thursday's price action. Okay, on Thursday, we pretty much had a huge deep retracement into... Oh, we have to take this candle's high over here. And let's take the midpoint. Yeah, okay, retracement into the previous day's range equilibrium, which is the midpoint between this candle's high and this candle's low. Note that we had a huge drop. We opened with a discount opening range gap of 400, around 460 handles. So continuation towards the downside was expected. And note that price didn't trade into the opening range gap consequent encroachment with the relative equal highs over here, but instead trading towards the downside. So if we look into this price action over here, you can see that 9:40 a.m. created the first presentation, which was this SIBI with volume imbalance included. Trading towards the downside, retracement up. Note that the body stayed inside the first presentation, but the wicks traded into the opening range gap low, which is pretty nice if you ask me. So we created the regular trading hours high within the first hour of trading, but creating the low of the regular trading hours during the New York lunch instead of the final hour of trading. And that is why, if you are positioned over here in a short and price trades towards the downside, you want to take partials and not hold your position for the final hour of trading. According to my own study, the final hour of trading creates the terminus around 50% of the time. So the other 50% of the cases, it's actually created prior to the final hour of trading. Yeah. So pretty nice, fast, sudden price action. Let's measure the reaction from the first presentation. towards the downside, talking about 4.35% equals 814 points towards the downside within 2 hours of trading. So this actually gave a beautiful short opportunity. And maybe we can add one standard deviation level. Okay. Note we just fell short of trading into the -2 standard deviation level measured from the opening range gap. Oh. Maybe if we add the -1 standard deviation level. Yeah, you can see that price is actually using this standard deviation level. And that premium and discount arrays are created around these standard deviation levels. So yeah, Thursday, beautiful day of price action as well. Could have captured a beautiful short. I'm not talking about this long opportunity because it wasn't matching the right time for me personally. But yeah, let's dive into Friday's price action. On Friday, as mentioned earlier, we didn't take Thursday's low over here and Thursday's high over here. No, or this high, depends on the fact if you measure from 16 p.m. to 18 p.m. till 17 p.m. or you are measuring from New York midnight towards the very next day, New York midnight. We traded inside this range, and if you measure this candle's high towards this candle's low over here, wow, okay, this isn't really working. Okay, like this, and we take the midpoint, which is the previous day's range equilibrium. Let's see, 9 consequent encroachment. You can see that Friday's price action, we pretty much traded throughout the day around the previous day's range equilibrium. So Friday, pretty difficult day of price action, but nonetheless, let's analyze what happened throughout that day. So, London session, 1 a.m. macro delivery, boom, huge rally, not gonna be exact over here, but around 350 handles towards the upside, pretty insane, into 2 a.m. macro, and this 350 handles rally over here was just manipulation towards the upside. And from there, 2 a.m. macro delivery, boom, huge decline during the London session. Left this London low over here, this London high, and if we draw a line, because that's our profession, we're drawing lines and squares and actually getting paid for it. So we have a beautiful job, if you ask me. Okay, 9:30 a.m. This up close candle over here. Note that we opened with a discount opening range gap of 141 handles or so. So that's pretty nice opening range gap, if you ask me. 9:38 a.m. created the first presentation, which was a busy. And note what happened next. Creating the busy, trading back into it, but note how many candles are printed inside the first presentation. So before 10 a.m. we have 1, 2, 3 candles inside the first presentation. And note all the candles printed over here, which is telling you we are in high resistance liquidity run conditions. But nonetheless, algorithmic principles still works. So, okay. Left these relative equal lows inside the opening range. Boom. Huge decline into these relative equal lows, into the London low. Push towards the downside, one final push below this short-term low, and this is actually the regular trading hours low created at 10:30 a.m., which is inside the first hour of trading. Note that we traded up, huge wick into the opening range gap high. I forgot to mention the opening range gap consequent encroachment got reached within 9 minutes of trading. So this minor long opportunity over here. So huge retracement into this busy, and from there we actually had a pretty decent rally. Note that we closed above the first presentation, tapping it back, finding support over here, real support, trading above the opening range gap high, trading back into the opening range gap high. We still had the relative equal highs created during London session intact. Trading towards the upside, just falling short of trading into that London high. Huge retracement into this busy over here, and from there, boom, final push inside the London high. And around this level is where the high of day was created. So maybe we can add some standard deviation levels. 1.5, 2, 2.5 and 3. Okay. So I said that around these opening range gap standard deviation levels, we can expect busies to form around these levels. Look at this. This standard deviation level was the 1.5 standard deviation level. Note the busy created over here. Busy around the 2 standard deviation level. This busy over here. Around this level, this busy was created. So yeah, pretty nice price action on Friday, but it took some time to unfold because during the start of the AM session it was actually pretty messy. From here, where we took this short-term low, you could have expected a rally into these relative equal highs, but note that price just fell short. Huge decline into London low. There your stop would have been taken. Yeah, from there 11:30 a.m. macro delivery was pretty wild and pretty decent. But yeah, again, Friday was not so nice price action. One setup for live unfolded where we took London low, trading up into London high, and that was pretty much it for Friday. So again, inside this Thursday's price range, we didn't take Thursday's low or Thursday's high, and therefore we expect Monday to have a large range day. So be ready for that and anticipate it. Okay, I want to thank you for participating. I hope you made it till the end and you learned something today. Don't forget to like this video and subscribe and share it with your friends. I want to wish you a very nice weekend and an even better trading week ahead. See ya!